Hey there, my name is Hugh, and there are 5 things that you absolutely cannot miss when you're backtesting a day trading strategy. If you don't do these things, your backtesting results will not be accurate and your strategy will not work in live trading. The first thing is that you need to test in different types of markets. So when you're looking at a chart, zoom out to a daily or maybe even a weekly chart and look for periods where there is different types of price action. For example, I'm here on the pound dollar chart. This is the weekly. And if you only backtested, let's say in this area here, you're not going to get the same results if you backtested in an area here. So you need to look for a strongly trending market, weekly trending market, sideways market. And with day trading, it can be difficult to do a lot of backtesting because there's so many trades to take, so many days to test, right? So one way that you can get some really quick results is to simply test for a few weeks, maybe 4 weeks in this area, 4 weeks in this area, 4 weeks in this ranging market here. And that will give you a really good idea if the strategy works or not, or it will also give you some ideas on how you can possibly tweak the strategy to make it work better. Once you have a good feel for the strategy and you think it will work, then you can expand your backtesting to other periods of time. But the best way to start is to do those spot checks in different types of markets, and that will give you a good idea if the strategy is viable or not. Number 2, be aware of the time of day while you're backtesting. Realize that in day trading, you can't be awake all the time. You can't be trading all the time. So you need to know when you're going to be awake, when you're actually going to be trading, and only take trades during those times in backtesting. So there are a few different ways where you can track the time of day on your charts. One that I came up with is this time marker here, and this works on MetaTrader 5. So in the settings, you can set the time that you want the marker to mark. You can also set up an alert that will send an email, push notification or pop-up on your screen. And this also helps in backtesting because it'll mark every single day with the same time. And you can use 1 or 2 of these on every chart. And this really helps with doing manual backtesting on MetaTrader 5. If you haven't seen my video on how to do that, be sure to watch that here. Another tool that you can use, especially in Forex, is the Forex Session Market Overlap. And this indicator is free and you can just put it on your chart. This is the 1-hour chart and it'll show you the London Open, when the London closes here, New York Open here, and the New York close there. So if you're backtesting on TradingView, then that's a tool that you can use. If you trade another market like stocks or futures, you can find another indicator. They probably have something that will mark off these periods also. Now, a word of caution if you're doing manual backtesting with TradingView. TradingView is not a good platform to backtest on because they're not going to give you enough data. So I'm going to show you proof of that here. So I'm going to zoom out as much as possible on this chart, and then I'm going to scroll it back. Okay, so this is the beginning of the data. This is all the data you're going to get for backtesting on the 1-hour chart, and it only goes up to January 2021. So that's not enough time to backtest. Like I mentioned, you have to backtest over several historical periods where there's different types of price action. However, if you just want to backtest the last couple of years or you want to see the market periods in live trading conditions, then this indicator is great on TradingView. The third thing to be aware of is the spread, slippage, and commission. This can be different in different markets. A lot of times the slippage is bigger in the stock market and futures, much less so in Forex, but that can happen. But you also have to be aware of the spread. So regardless of which market you're backtesting, always try to factor in the slippage, commission, and spread because that will give you the most accurate results. I've done some backtests where I didn't factor in the slippage or the commission or the spread, and the results were fantastic. But once I factored in those things, the trading strategy actually didn't work. So it's very important to factor those things in. And the easiest way to do that is to use backtesting software like Naked Markets that will factor that in. So as you can see down here, the spread is factored in, and as I move forward, the spread changes according to the data in the file, and that will allow you to determine if the trading strategy actually has an edge or not. Number 4, don't stop backtesting. Like I mentioned before, there's a ton of data to go through when you're backtesting a day trading strategy. That can be a downside, but that's also a benefit because you have all of this data that you can practice with. On a daily chart, there's only so much data you can have, right? So you're going to go over that over and over again. However, with day trading, you can go over a ton of data and not run across the same scenario twice. So even if you have a strategy that works in live trading, I would highly recommend going back and not necessarily backtesting, but practicing with that historical data. That will help you keep your skills sharp even when the markets are closed or when there are no trades available. And it could help you find optimizations in your trading strategy. All right, before I get to number 5, remember that all the resources mentioned in this video are in the description below. Check out those links if you want to find out more about those things. All right, tip number 5, is have as much historical data as possible. Now, like I mentioned before, TradingView is only going to give you a couple of years. That's not enough to thoroughly test a day trading strategy. So be sure to get some sort of data package. You can download the data separately. You can go to MetaTrader to get your data. If you're on another platform like TradeStation or something like that, you can get the data there. Forex Tester and Naked Markets have data available also. So get as much data as possible, because that's going to allow you to practice. That's going to allow you to see how your strategy works in different market conditions. And that's a very important part of backtesting a day trading strategy. All right, again, my name is Hugh. If you want to learn more about backtesting, be sure to watch this video. If you found this video useful, give it a thumbs up, subscribe and hit the bell to get more videos like this. And thanks for watching.